Joining us for a look at what to watch on the commodity markets next week, Phillip Streible, Chief Market Strategist at Blue Line Futures. Phillip, thanks very much for coming on the show. Happy Friday. What do you think will be the big story in commodities next week?
Well, we're going to continue to watch any kind of headlines coming out of Europe, specifically Bank of England, which we saw that there was a big changeover today. They had fired their finance minister, brought in a new one. So you could tell that that central bank is really in shambles right now, trying to get inflation and everything else under control. We'll continue to monitor any kind of inflation data coming out globally, specifically in Europe. It's expected to come in hotter than expected. So, the type of movement that we're seeing in the currency markets right now, the dollar index is going to continue to remain firm, and you're going to see European currencies all continue to come under pressure.
European currencies generally, you think, is that because of just the grim economic outlook for that part of the world?
Absolutely. I mean, you've got energy costs in Europe. They're up about 25% year over year. Mm-hmm. You look at most of the currencies out there, they're down significantly against the US dollar. And all of their interest rates, remember, when you get over in Europe, they don't have 15-year and 30-year fixed mortgages like what we have in the US. They have these variable rate mortgages that often reset every few years. And if you look at some of these, they're going from essentially 0% interest rate on up to 3 and 4%.
That's interesting. Yeah, of course, we had countries like Denmark for a while had negative mortgage rates. I never was able fully to get my head around that. Gold, you say the outlook is not that promising right now. You said you think gold could test 1,600?
Yeah, even break below that. And I know that, most of the people that track me, they don't want to hear that at all. I'm usually a gold bull. I do a lot of, I contribute a lot on gold websites and things like that. The reality is, though, is that's what you have to face. The dollar index versus gold, that inverse relationship is about 82% right now. Anytime you get quantitative tightening, you get, aggressive interest rate policy. Even when we looked at the Fed's watch tool, 97.8% chance for a 75 basis point rate hike on November 2nd. And this was the first time that the 50 basis point expectations were kicked off the chart, and it goes to 100 basis points. So it looks like the way it's going to work is the Fed is going to continue to raise rates aggressively until we get to spring 2023. If you look again at that tool for Fed funds, you'll see that the first possibility of a cut doesn't come until the September to November meeting out in 2023. So if you're waiting for that dovish pivot, you're just not going to get it until later in the year, next year.
Yeah, we're looking at some of the big themes in commodities for next week. The Fed, of course, people will be perhaps dreading yet more hawkish pronouncements from them. Stocks and commodities, I know it's a complex relationship, but generally, if stock markets go down, are commodities going to do the same?
Well, I mean, that's the way it appears. You look at the NASDAQ yesterday. I mean, okay, we had an incredible bounce, but when you get these kind of moves that are 5%, that's not a bull market. You don't get those at all. And that surely wasn't a bottoming process whatsoever. The NASDAQ made a new contract low before bouncing higher. And what you can look at is, okay, last week, well, when it was October 3rd and 4th and we got this surprise bounce on Bank of England, whatever, pivoting dovish or attempting to, you saw that rally lasted 2 days, two 700-point rallies. Yesterday, yeah, you do get a big reversal back up, but look today, we're starting to slide off again. These are not bull markets whatsoever, and bull markets aren't formed when you have volatility, north of 30.
What about crude, Phillip? You touched briefly on energy, but crude, do you see a significant rally in crude in weeks to come?
I want to be bullish on crude. I think that there's enough geopolitical risk to set crude oil up higher, but the reality is we're way off that 123 high. We are bouncing around in the mid 80s on up to the early 90s. I think we're going to continue to stay here. The inventories are tight. We're definitely below the 5-year average despite a large build of 9 million barrels. Gasoline is continuing to struggle to find any kind of build, so you're going to continue to feel it at the pump here. And heating oil and distillates, we got 106 million barrels in inventory versus 136 is the 5-year average. I think heating oil is your best play. The problem with heating oil is the contract is too large, 42,000 barrels. So every penny moves $420 for a commodity trader. it just doesn't make sense for a lot of people from a risk management standpoint to try and get involved in that market.
You closely watch the agricultural markets. What themes are you seeing there? Start off with the grains, if you would.
Yeah, so the corn market, that's going to be your best one that has like a bullish trend underneath it. It's been, bumping right around that $7, a little bit below, but it seems like, there's some tightness in that crop. You look at yields, they were lower than expected, and also your ending stocks were lower. The wheat market, that has been a real nice trending move higher, and the global stocks, they tend to remain tight right now. U.S. inventories are a little bit better than expected. That's why that chart's starting to give up some gains. So we might see some rotation out of wheat into corn. Now, soybeans, they did have bullish headlines, but what we're paying attention to is those levels of the Mississippi River right now. They've come down to historically low levels, so barges can't make it down to these shipping hubs to export. So the U.S. might be flooded with some grains here coming into the harvest.